Welcome back. You're watching Credland. Look, just into the newsroom, Clive Palmer has been charged with criminal offences by the corporate watchdog ASIC over a series of alleged breaches of director duties. Now, the regulator has said this in a Parliamentary Oversight Committee meeting today in Canberra. Parliament, of course, is not sitting, but committees meet outside of the parliamentary period as well. We'll stay across the story as more comes to light. All right, let's talk about the share market here at home and, of course, in Wall Street too. The ASX is feeling the effects of the global coronavirus outbreak, today closing down 3.3%. Losses have set Wall Street on pace for its worst week since the 2008 financial crisis, and it looks like Australia will be in a similar boat, with the ASX having already fallen into correction territory. Dr. Andrew Stone is the former Chief Economist to the Prime Minister. He joins me now from Sydney. What does this mean, Andrew, for ordinary investors in the broader economy? We've talked a little bit before there about the surplus and the fact that that's now in jeopardy. These market movements, it's almost like the stock market has watched all this stuff unfold with coronavirus, didn't react for the first sort of 6 weeks. We were all talking about it. And it's really in the last 2 weeks it's reacted, and it's reacted badly.
That's right. It's still unclear, actually, how important this will be. We've moved to the point where it is a significant correction now, more than 10% from the peak. On the other hand, it's only taken the stock market back to where it was about August last year. So the truth is that I think both in the US and Australia there had been a certain amount of effervescence in stock prices, and of course that's it's a bad news if you've had a correction if you happen to buy in a few weeks ago and if you're planning to sell soon. So that's difficult. On the other hand, it's not necessarily bad for the real economy. What really is still unclear is how much what's going on in the stock market is portending future real events in the real economy. So that's the thing that's still very unclear, how badly affected the actual Australian economy will be and how badly affected the US economy will be. At the moment, the trouble is there's still such a fog of confusion, in fact, about both how serious the coronavirus is. There are many people who still would say, well, thousands and thousands of people die every year from the flu. Is this really much worse? My own view on that is I'm inclined to take it fairly seriously, partly because the Chinese authorities, we can't trust a single word that's being said by the Chinese authorities on this issue, but the fact that they are quarantining or preventing people, hundreds of millions of people from travelling, suggests that they must be viewing it as a very serious event. That will have immediate economic consequences, particularly because of supply chain effects. The fact not only is Australia very exposed to China.
So let me just jump in there. Let me just jump in there because I was going to ask you a question. Yep. Is the ASX drop more to do with companies not getting in predicted revenue, so it's hitting, the tourism sector, let's say, or the Qantas share price more than other players, or is it a generalised spread of falls? And because so much of the supply chain nowadays is basically just in time, so a lot of businesses in Australia are waiting for components from China. They haven't arrived, so their own broader workforce is being stood down, and we've obviously got all the export issues with our horticulture and other things.
Well, I think we should say there's the risk of lots of workers being stood down because of their supply chain problems and so forth. Not much of it is yet to manifest itself in detail in a country like Australia, but it is a serious risk. I mean, there are some companies, obviously, that are particularly exposed. If you're Qantas, well, you're extremely exposed. If you're the universities, they're not companies, but they're extremely exposed in Australia, reflective of their extraordinarily poor risk management practices to put themselves in this sort of position. The question still remains, though, how we have to see how the virus will actually, how long this will persist, how serious it becomes. But the consequences are potentially significant, and they're potentially very significant for Australia because we are unlike most developed countries. We have a large trade surplus with China, and so there are certainly significant sectors of the Australian economy that are exposed. I mentioned higher education, you mentioned tourism particularly. Also, some of the companies that have been hard hit have been miners today, because we sell an enormous amount of iron ore and coal and other products to China. And so in that sense, even if Australia is not directly affected, if the Chinese economy slows, and it already will have slowed very considerably in this first quarter, that will be affecting demand for iron ore and coal and so forth. The flip side to that, what's just worth saying, is prices of some other commodities will fall. So oil prices have also fallen, and that's something that will actually help lots of Australians. It won't be good for our gas producers whose prices are tied to oil, but for lots of ordinary Australians, it means petrol will become cheaper at the pump, and that's a converse benefit.
I'll believe that when I
offsetting
see it,
benefit.
Andrew Stone. I will believe that when I see it. I want to quickly just go to the United States. I'm going to ask you to stay around because I've got a very interesting chat with Corey Bernani coming up, and it's related to all of this bond market stuff. But just on the issue of the United States, someone said to me the other day, the real challenge for the president out of all of this is if the economy turns difficult, it gets into some difficult territory because of coronavirus, and there's every evidence from Wall Street overnight that could be the case, it will make it so much harder for Trump going into the election because his strong suit for all the detractors and everything that they might be out there saying about the president, he has delivered all the economic promises he said he would do, and that is what he needs to keep going until November. What do you make of that analysis?
Well, I'd say a couple of points. First of all, it would appear that President Trump is the smartest man in the world at the moment, actually, because he is the one, more than anybody else for the last few years, who's been banging on about the importance of the US reducing its reliance on and its intertwining with the Chinese economy. And although I'm sure he didn't envisage coronavirus being the particular trigger for seeing that up front and close, he's the one who's been warning companies over and over again about their risk with the supply chain being linked into China. In terms of the political impact, the one saving grace I think that you might find here again is that it's true that this will have a direct impact on the American economy, and there are a lot of globally facing companies, so particularly the ones that show up on Wall Street, that will be significant or are threatening to be significantly affected. On the other hand, there's the whole, what people often refer to as the sort of Main Street economy, which will be much less affected by this. And indeed, a flip side of things being very difficult in the Chinese economy and the highlighting of these supply chain concerns is that there will be a whole lot more companies now that might be thinking we need to be investing heavily in America so that we build some supply there. And so this was a phenomenon actually at the time of the Asian financial crisis in the late 90s. We lost, it was very damaging to a lot of our Asian trading partners who were big trading partners of ours. But on the other hand, it actually led to a lot of capital investment in Australia.